Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
Stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we got some news coming out here. I should probably be just real quick, but we got an interesting market once again. So yesterday here in the treasuries, wait, hold on, let's turn on some music. The treasuries gave up pretty much all of their gains from yesterday. Isn't that wild? I mean, that was a strong uptrend in the treasuries. So to see it like, well, okay, they didn't give up all of their gains. It was all the way back here. But I guess some of the overnight ones were kind of retracing. Over here in the S&P 500, ugly day, and overnight they're continuing down. So this is starting to look like a downtrend, and I really have to wonder if we're not going to get down to like this 3,800 area, you know, before the end of next week. Oil taking a big hit as well, so it was across the board. Gold and silver still kind of where they were. Well, silver taking a bit of a dive, so I think that silver sometimes goes along with risk, and so it falling with the other risk assets is interesting to note. Copper also, after having such a strong run the previous night. Bitcoin, some news in the Bitcoin market. There was like an enforcement action. It kind of ended up being nothing burger, and they recovered, but not by much. So. And then you've got the dollar index here. It moved like really big time yesterday, but in the end came back to where it was. So we're gonna have to continue watching the dollar very, very closely here. We are going to be getting some news here in about 2 minutes. We're going to have initial jobless claims. We're looking for a reading of 213,000. That would be up from the previous reading of 205,000. So jobless claims increasing. We're also going to get the U.S. Philly Fed Business Index. We're looking for a reading of -11 versus a previous reading of -13.8. Remember that yesterday we got some numbers from New York and they were so dismally bad compared to what we were expecting. So that's kind of, we're going to watch that one real closely. We're also getting building numbers. So building permits, housing starts. I won't go through those numbers, but that's coming up. So we got decently significant news coming up on us here. So well, time to get locked in. I'm a little late this morning because I was ruminating about how much Discord trust and safety sucks, but it's okay. We don't have to worry about that. Let's see if there's anything interesting on Twitter in the meantime. No, not really. Well, they're buying these treasuries ahead of the news quite aggressively. Also, I should note that in the 10-year yield, we're well below 3.4 now. Okay. Still getting the numbers here. It's a lot. Okay, so Philly Fed was not as bad as expected. It's probably why they're coming down. Initial jobless claims 190 versus 214. So there was some rallying going into this, and they're selling it down. That's quite a decent move there for this kind of news, but it's retracing the move from before, so I don't know if I can read too much into that. The equity market not taking the news too well. I don't know if this is like such a big change that we should really see too big of a shift, but let's just kind of wait and see. The volume is definitely there in the treasuries. You wrote a comment to your oh, did you? I didn't see that. I appreciate it. You go back and watch the replay. That's cool. EDT was introduced in 2001. Wait, they're allowed up to 35? No. We weren't talking about hedge funds, though. Oh, I didn't know about that friends and family exception. Yeah, I was only saying, like, so I remember there was this guy. Let's talk about this. I'd love to talk about this. So there was this guy that when they put the rule out that if you have a Series 65 or a Series 7 license, that that would also be an exception for you, right? And so he did that, but when he went out and he was looking at I forget what the website is. There's a website that kind of like lists or tries to list all of the hedge funds and like all of the information about them and stuff. And they only had, there was like only one fund that he could actually invest in. Like there was one fund that their minimum investment was $1,000, and that was the only one that he was like allowed into. That's why I was saying that. There certainly is these special cases where, like, if you work for them or all of that sort of a thing, you can get in. Yeah. And there's not like, yeah, it's not like the government sets the limit. The fund can put whatever limit they want on it. But I think that the thing is that these strategies do require a certain amount of money, so it doesn't really make sense for them to say, oh yeah, like you can only invest, you could, it's okay if you only invest $1,000. They don't, you know, that doesn't make sense for them. They want somebody to put $1 million to work anyways, or it's like not worth it to even take your contribution. This is kind of what my point was. It's only 35 though. So that tells me how, like, if I ever ended up working for like Renaissance Technologies or something like that, is that the or do they fit, do employees fit under a different exception? Well, and usually the money only comes in after you prove to yourself, so why not gouge their eyes out instead of being, yeah. Well, I'm not so concerned about the hedge funds because it just seems to me like, so the one thing that I haven't been able to figure out from the material that I have is like, what is the restriction on mutual funds? Because it seems to me like you make a hedge fund because you just don't want to be as transparent and so forth, right? And that's kind of what it comes down to. or in other words, like I don't see, I haven't found the rule that basically says, oh yeah, you can make a mutual fund and anybody can invest in it, but there are certain risky things that you can't do because you're a mutual fund. It seems to me like such a rule exists, but I don't know. It's not in any of my material, right? But my rant was really more about, I mean, I'm not so concerned about, well, let's let everybody invest in a hedge fund as much as I am like private placements and you know, some of these other kinds of securities that, you know, are kind of limited to the public. Basically, what I would like to see is a website where anybody can go. You have to fill out all, you still have to disclose everything. I don't think that there should be any less disclosure than there is, but just that it would be easier and faster. You know, like these rules were all made in a time when we didn't have the internet. I think that you should be able to go in, you post all of the information, they verify it for you, and within a week you could be putting up a security, and anybody could do this, and you could create a micro investing website. And there are some people out there that are trying to do things that are like GoFundMe, but where you can sell actual equity in your company, but it's like very limited what they can do. Okay. Oh, they can't go like 20x, and there are more yeah, there are definitely more disclosures, that's for sure. Like the bigger thing here, what bothers me is that Wall Street kind of weaseled their way into the laws and to put themselves at the center of how we save for retirement, right? Basically, it doesn't make sense to really put your money when you're saving for retirement. That the whole system is basically set up to where it's stupid if you're not trying to max out your 401k and IRA with index funds, right? And really what we would like, what I think would be beneficial for society, is that people invest in individual stocks. Well, like it kind of doesn't make sense, at least not for your retirement. If you're really into it, and you have extra money, then go for it, right? But it doesn't make sense to premise your retirement on that. Why? Well, because there's more risk in individual stocks. You know, you can lose more. You tend not to lose. Well, I mean, index, maybe you get a 20 to 50% retracement if you buy in at the wrong time, but you know that if you hold it long enough that you're going to recover your money. Stocks, on the other hand, like most businesses, go bankrupt in the end, right? So the individual business risk is a lot. And then if you do make the money, you got to pay the taxes on it, right? Which makes absolutely no sense. Makes absolutely no sense. Shouldn't the incentive be placed on getting people to own individual stocks? Well, like that's the whole thing, is that the politicians don't realize that there's like good reasons to have people own stocks, right? The check and balance in the capitalist system on a company doing things that are not against the law but are against the public interest, the check and balance on that is that the public owns the public companies, and so they can come in and they can vote down something, right? And the whole system was basically structured to dissuade regular people from investing in stocks so that Wall Street can manage it all for us. So then they can take a little bit off the top with their index fee or whatever the deal is, right? And then they're the ones that are on the board of all of the companies, and they have all of the control instead of the public. Wouldn't it be better if we had incentive for people to own individual stocks? If you're making money, if you make money from an individual stock and the gains are less than $100,000 a year, it's tax-free, right? Why not? Outlaw ETFs? Man. I mean, I'm kind of tempted to agree with you, but I'm not 100% sure what the impact of that would be. I would think that at least in the short term, outlawing ETFs would be like a really nasty negative thing, right? I don't know how you would do. It would have to be like over time sort of a thing, right? It would have to be like the funds like slowly divest themselves and return the money to the investors in your account, and then you can turn around and invest it in individual companies or something. Like it would be. Yeah, I don't know how you would get away from it, right? I think that you would instead, you would just have to provide people reasons to want to not put it in the index fund, right? It would have to be instead something like you can invest in single stocks tax-free, but you have to pay a tax on index funds. And the tax like gradually goes into effect over a period of 10 years or something like that. Right? I don't know. But like, because here's what I see is the kids these days, like let's say Gen Z. Gen Z is skeptical of capitalism. That's really what's happening, right? If you go on TikTok, these kids are like anti-capitalism. It's very, very prominent all over the place on that platform. I don't know if that's just the TikTok algorithm trying to like destroy America and all of that sort of stuff, or if it's just the kind of content that I end up watching or whatever. Like the algorithm is doing it just for me. But there's a lot of that among Gen Z, skepticism of capitalism. And why is that? Well, I think it's because we keep lying to them. We keep telling them this lie that the market is perfectly efficient. It's been ingrained into everybody's head since like the early 80s that the market is perfectly efficient and is never wrong. And all of these kids who now have access to the internet and are looking at stuff about businesses every day because it's in the media, especially with Elon Musk and everything. And it's so obviously not true. There's so much inefficiency in the market that is just glaringly obvious. And so, right, when that's, if you're telling them that lie, it's pretty easy to extend that to just questioning the whole system, right? The reality here is that the market is not efficient. It's maybe more efficient than the alternative, but it's not even so much that it's more efficient than the alternative than it is like that there just isn't any alternative, right? There's no way to collect all of that information into one place so that we can get goods to where they need to go, other than a capitalist system, a capitalist free market system. And the capitalist system provides maximum freedom, right? And so that's why we do it, not because it's efficient, right? And the thing that we need to understand as a society and lawmakers and the financial industry in general is that the market is not efficient on its own, and it's contingent upon us to make good decisions and change the structure of the market where necessary to try and make it more efficient. Because if you don't, and you just go along with what it does on its own, then what ends up happening is all of the money goes to one person and everybody else doesn't get paid what they're worth. That's what's happening, is all the kids are saying, this market is not efficient, I'm not getting paid what a fair market wage is, right? There just aren't many good jobs out there. Paycheck does not buy much for a good 50% of people. I don't understand it because, you know, of course I know that I make more than the median person because I'm a software engineer and it's like a high demand job. But what I don't understand is how like the median income in the country is still like $50,000. That's weird to me. That it's like, are we saying that like literally 50% of the country is like living on poverty wages? Like, how is that the median? you know? The Gen Zs who got burned. Well, I don't know who got burned on what. You know, there's all sorts of things that happen. One of the things that's been the most disappointing to me was that everybody got interested in markets because of the GameStop thing. And instead of it becoming a way for people to learn about the markets and to say, oh, hey, here are some things in the market that we should change and that aren't working very well. Instead, it basically became a cult. And they're still along. It's so dumb. I blame Bitcoin because a lot of the people that switched over were people from Bitcoin, and the people on Bitcoin think that everything is about hold it as long as possible so that other people come in and yada yada. They didn't understand what was going on, and so they didn't understand when the trade was over, you know? It's really frustrating, man. I blame MIT for that, for enforcing journals to not publish anything against the efficient market hypothesis for well over a century. Yeah. Like, and the crazy thing is that among the boomers in the financial industry, it's still like yeah, they still cling to it. Because like I said, for the last like 30, 40 years, they've been pumping into everybody's head that the market is perfectly efficient, when we know it's not. Right? And I really think that if we just acknowledged that one fact and got people onto the idea that we can change the market by changing the microstructure, you know, we could make some positive changes. And instead, everybody just chases this nonsense. Graduated welding school in 2004. Ooh. Looking at welding jobs paying 18 to... No, you can make serious bank welding, and I can't believe that you're seeing $18 to $20 an hour if you went to school for it. I mean, there are certifications and stuff that you have to get first, but I've got these guys that are making as much as I do welding. I have a friend that makes as much as I do welding. But you have to have, you know, certain types of welding that are more skilled, and it's like if you can do a weld where, like, for them to where they x-ray the weld to verify your work and stuff, then you can make serious money from it. Or if you're willing to, like, scuba dive, then you can really make serious money from doing it right. Oh, I don't know. You'd have to ask my friend. Go do. I urge you to go and do some research, because you can make some real money welding. The median welder makes 52K. Well, I'm not saying that all the welders make money, but I just know that there are some welders that make serious money. There are actually a lot of these trade jobs that you know, if you're able to move up the ladder, you can make some decent money from it. Maybe it is the case that it's just the software and finance industries where people are making six figures and everybody else is like literally making less than medium wage, like. And that's why I'm so like, how can they not be? How can the median be so low? I know 2 plumbers who make 700K. Yeah. Well, because plumbing is usually you're self-employed, so that's kind of a little bit different. Appliance repair is fine. I would think that the cap on appliance repair would be a little bit lower. But I'm telling you, for welding, like, there are jobs in welding where they really need people, like they really need the people, and they pay well, and you just have to be able to do that type of welding. So Okay, so we came back to 3.4. A little bit of an excursion in the treasuries to the downside. I'm not 100% sure what to do here in this situation. I'd say that things are relatively quiet right now. Indeed, go look up welding jobs. Then it will start recommending welding stuff to me, though. I don't know if I want to do that. I'm really like the jobless claims number continues to be like okay when it really feels like a lot of companies are laying people off right now. Or it proves you're right. Maybe I can go to glass ceiling. We should trade, but I don't think that we're gonna have anything too big happen for a few minutes. So I think we can relax for a little bit. Oh, I thought that the website was gas ceiling. Am I wrong? Oh, maybe the reason that I think that it's so high is because if I come in here and search, it's not giving me pay information. Wait, if I click on one of these. Yeah, these guys want like 16. Okay, so they say their salary range is $29.33 to $48.85. Work hours in a year, 2080. It might not be quite to six figures. 2080 times. They're willing to pay $48.85. Oops. 2080 times $48.85. Oh, it is 100,000. Yeah, it is going to be a small percentage. Probably. So what I'm just realizing is that probably the reason why I know guys that are making that much from welding is because it's Northrop gunmen. Am I pronouncing that right? Northrop gunmen. And it's not even called welding, it's called engineering technician. Right. So I think it has more to do. So if that's an opportunity that not everywhere might have. Weld the F-18s and make some money. There you go. No, I think that my friend, the last thing that he talked about welding on Facebook, I don't talk to him too much as a guy I know from the rave scene. He was like welding like these like shelter sort of building things. It was like a building that was all set up to be like a bomb shelter or something like that. And they have like very specific qualifications about how good the weld is. And so it wasn't that it's, but I mean, the thing that he was saying was you just have to know the right education to get to do. And you know, you have to be good at it. Not everybody can do it. Okay, but you just pass the certifications and then you easily make 100K. Probably not as good of a gig as technology. You know what the problem with technology though is, if you want to go into technology, is that like all of the really good technology jobs, they put you through super brutal interviews. That's the problem if you want to get into technology. You have to prepare for the interviews. But you know what? Small price to pay. Small price to pay. You to test the welds underwater on the rigs. Yeah, or how about those guys that like they literally live at the bottom of the ocean for a month? Oh my gosh, those guys make these guys that like they can work for like 3 months and make 300,000 in 3 months or something like that, and then not work the rest of the year. Insane. But that's like very, very dangerous job. Most of them drink like fish. So it does look like your base level welder makes median wage though. It's just I still have a hard time wrapping my head around the income distribution. Like I understand there's like this group of people that because they're making money from the investments, they make so much, right? But I when I'm looking at like the people between let's say minimum wage and 6 figures, you know, I would have thought after inflation and everything that the median wage would be closer to $60,000 to $70,000 a year now, and it's still where it was when I came into the workforce. I remember when I started working, I made like, well, when I first started working in finance, I made like 60, I think it was. And we lived in like a 2-bedroom apartment. And we didn't have kids, by the way. Right now I have 5 kids. And I make 6 figures. So like, how are people living? I don't get it. Because everything that I see online is like, you know, if you want to live in LA, you have to pay like $5,000 a month. Like what? That's like twice what I pay for my house. How is that? That is insane. How are people living? And then the median income is actually $50,000. That can't be the case. How can that possibly be the case? One of these things doesn't match up. Now I'm actually like questioning the numbers. That's weird. It's a conspiracy. There's got to be something in there that I'm missing about it. Well, I don't know what I can say to your comment there, Akshay, but can we segue? Can I use that to segue into a different issue that is like important for us to understand as traders, and we want to understand the world and where the US is going? One of the big things that happened this last election was that young single females came out and were a very significant voting bloc. Very significant voting bloc. That they said that it was something like 40 million voters or something like that, which basically makes single females as large, if not larger and more powerful of a voting bloc than Black Americans, for instance. Like that's how big and monolithic of a group, like how extreme, and I shouldn't say extreme, but they are all voting one way. It was like 70% break for Democrats, right? So essentially, when you look at like the demographics and the way that people are voting, men are in general voting Republican, and married people are in general voting Republican, and the minorities are all voting Democrat. And then because the young single females are all voting Democrat, that's the thing that's kind of shifting the balance and power of Democrats right now. And one could say that it was because of the whole abortion thing, but it really seems like it's more than that. Don't you think? Don't you think? And so what are the issues that they have that they're what are their issues? Well, certainly how much they're getting paid has to be one of them, because if most of them are only making less, if they're making less than 50K, right? Because then the question becomes, if you're Republicans and you want to make inroads into that demographic, how do you do it, right? Because it's not going to be through moderating your views on abortion. There's no way the Republicans do that. I was once told by a young woman at a minority rights parade, "You people make up a sixth of the world pop. You are not a minority. You are not welcome here. Go back." Are you for real? Man. It comes into one of those things where it's like, I know if anybody's a Democrat listening right now, they're not going to like what I'm saying, but I almost can't help myself, man. One of the things that bothers me so much is that the Democrat Party seems to think that they have this monopoly on virtue, and it's complete and utter bullshit. I think the reason that they think that is because they've got this ingrained into their head that, that we're all perfect little angels when we're born, and that it's the society that ingrains these bad ideas into us, right? You notice that, like in all woke ideology, that's kind of what it comes down to, is that anything that is like creating discrimination, like people to have discriminatory beliefs and opinions and whatever, that is all ingrained into us by society. Right, that's what they think. And so the reason that they have a monopoly on virtue is because they're pushing back against the society, right? And ergo, they're not vulnerable to those problems, let's say, right? It's total bullshit. It's total bullshit. You know that like little children show racial biases like as young as 6 months old. Like they've done studies about like, who holds the baby, and that the baby has racial preferences. I'm telling you, man, it's like ingrained into your genes. It's not ingrained into your genes to prefer people from a certain race or something like that. But what is ingrained into your genes is for people to divide into in-group and out-group. This is an evolutionary thing ingrained into people that has helped us survive, because basically in an area of scarce resources, you and your group together, the more solidarity that you and your group has, and the more hatred that you have for the outgroup, the more likely that you work to survive, right? So if everybody in the area looks the same, we just find different ways to differentiate people, right? So, and that's kind of what happens in liberal circles, right? So they start doing it based on ideology instead. And so, when you come in and you say, well, I'm fighting against the system because this is all ingrained into our society and that's what causes it. And you don't realize the actual real like genetic behavioral biases that are put into people that kind of cause these things to happen. Really what it does is it makes you more vulnerable to doing hateful things. Is really what it does, right? That's what I think. And that's why you run into so many liberals that can end up doing the most racist and just disgusting things, right? It's because of that hubris that they think they're so perfect, right? Yeah, a million years of tribes will do that. I mean, one would argue that it's a behavior that's not really relevant in a modern society anymore, but sometimes I kind of wonder if we ever do come into a point where, the tribalism ends up mattering and the more tribal people will win. Yeah. It would have to be a period of, much more scarce resources, right? So are you saying that you were here in the US and that happened and you moved to the UK? Well, I mean, theoretically, what would happen and what the the globalist dream is everything intermingles until there's no races anymore. 1,000 years from now, there's no quote unquote races, and then there will be peace and harmony across the planet. That's what I think some of these people believe. That's why I highlight the fact that it's not so much that it's ingrained into us to look at people's skin color, but rather it's ingrained into us to look for differences between in-group and out-group. And if we can't find those differences in in-group and out-group based on appearances, then we'll find them based on opinions. Are you ever going to get societies to embrace sexual depravity the way that we do? There's like a concerted effort that World Economic Forum has entered into the chat. You know what? I should take it. You guys keep going on. Let me take a few bites here and think how I want to approach that. Yeah, there's all of this stuff about Davos and everything, and that like there's tons of prostitutes there and everything is really like. Remember that the World Economic Forum is a quote forum, so it's not that the World Economic Forum has like a specific agenda that they've decided. What it really is that there are a lot of crazy rich people that are so out of touch that they're willing to go out in public and say the crazy things that they do. That's really what that's about, right? Yeah. The World Economic, everybody, when you look at the right, the media on the right is all geared towards some sort of conspiracy theory about how the World Economic Forum is trying to undermine our society and everything like that. When really, I think the takeaway that people should be getting from the World Economic Forum is how stupid and out of touch the ruling class has become. Yeah, the crazy part is some politicians are willing to listen to that stuff and make policies around those. Yeah. I don't understand how all of the research basically becomes that having nuclear families is more effective, that the outcomes for children are better if they have both the birth mother and the birth father in the home, right? And then all of the policy comes in on the side of trying to break families up, discouraging the nuclear family. How can that be? I just don't, like this is this one place that I can identify where all of the research points one way, and yet all of the public advocacy and the laws and everything that comes out is completely against what we know to be true. How is that? Oh, because there's too many people? It could be because they think there are too many people. But again, here's the other thing, is that all of the science about population says that we need to have more people, not less. Like, come on. Yeah, you might be right. Like, I don't think that there's a conspiracy theory, but what I do think is that on some issues there's kind of like a mind virus of sort, pieces of misinformation or beliefs about the world that aren't true, that are leading people to advocate for harmful policies over and over again, right? This is kind of why, like, from my perspective, the way that you solve this problem is you have better research and you educate people better, right? And that's kind of why a lot of the like anti-intellectualism that I see on the right sometimes kind of bothers me, because what I see is that if we were actually educated on these subjects, that so many of these ideas would not be happening, you know? But that's the thing, though. The research doesn't say that. Like, that's the thing. It's shoddy research, okay? Like, all of there's been a couple of studies that kind of suggest that gender transition helps prevent suicide, quote unquote, and like all but 2 of them have been retracted because of serious issues. Okay, and all of the ones that I've read or the ones that people will typically cite are all based on like online surveys. So the reality is that the science doesn't say that at all. It's just that people have that there's some shoddy research out there, right? So again, if we were truly educated on the issues, and we were doing good research, you know, it would be a different issue. See, the problem isn't like this, you know, these smart people that think they know too much, and the problem is that there are too many people out there that could be involved in this research and, being a check and balance on this system so that the research that we were doing was good, and they choose to stay home. They've just said, well, I don't like the way that part of where academia is going, so I'm just gonna not participate. And so then by not participating, you let them win. No, the social sciences do not have a good reputation when it comes to research, do they? I mean, there was a time when they had when behavioral sciences had some good research, I guess. But it's kind of, we have the same problem in economics, at least in certain branches of economics, where the nature of the research that you're doing affects politics too much, that the politics comes in and will put pressure and try and nudge the research in their direction, right? And especially in sociology, it's basically gotten to the point where, yeah, a lot of the research is nonsense. Then the other issue on top of that is that most of the easy problems have been solved. We come back to this one over and over and over again, don't we? That the easy problems have been solved. Things where it's like, there's a 60% chance that people are going to behave this way in this certain situation. Like, you don't even really need to do research to know those things anymore. Like, humans are really good at noticing that stuff on their own. And so you were doing research like that, all of the conclusions that you're going to come out with are just going to be like no duh conclusions, right? So all of the things that we have yet to learn and discover require much more sophisticated methods of research and statistics for us to understand. And the problem is that we're to this level where the sociologists don't understand the math. So they're doing all this research and they're putting this stuff out about the statistics, but like the data that they're generating isn't actually statistically significant, and they're just not savvy enough on the math to understand why. No, happens a lot. The problem is academia and culture trends. Now, you know what? There are serious people out there that are serious scientific minds and want to do serious research and want to understand serious statistics and so on and so forth. And they're there in every field. Of course, there's a lot of people that end up being political hacks, but there are serious people in every profession. They're talking out about it. And I think that a world where we're much more empirically based is not as far away as you might think. And all it will really take is they're in a bubble, right? So all it's going to take is somebody to finally kind of break into the bubble, and the whole thing will just collapse, and they'll kind of see it, right? COVID may have been one of the first cracks, because yeah, there was many things on many subjects. For instance, do people that have had the vaccine, can they spread the virus? And they kept telling us that they couldn't spread the virus, right? And that turned out to be completely and utterly false, right? Everybody can see that. That's kind of like the first cracks. It is. You got to be careful when you're talking about that, like especially like the trans, because my take on it would be we don't really know, because we just don't have a good enough science to know what's what's really happening. And you're talking about like people's lives, so we can't come in and do like a study where it's like, okay, we take a group of 100 people and 50 of them we give the surgery to, and 50 of them we do these things and see how their outcomes are. That wouldn't be ethical, right? Yeah, maybe we should switch to a different topic, because I feel like that I only have so much to offer on that. And I'm trying to keep it on the subjects that we really care about here on our stream, like empiricism and how to do good research and how to prove things and stuff like that. But it's too tempting to go into our own opinions about it, and conspiracy theories and all of this sort of thing. Like when we say, oh, it's just because they want patients for the rest of their lives. Well, if anybody that was transgender was watching, they'd be very offended by that. So I don't think that we should say things like that unless we can like prove it, But NASDAQ Killer here is asking what caused yesterday's flush. This is a very, very good question. So I don't know if you saw my short, but there was a lot of things that happened yesterday that could possibly be an explanation, but none of them completely 100% fits. Like, the big issue is that for the first about hour, the equity market just kind of went sideways and was fine. You're the first person I've ever encountered that would say the healthcare industry being motivated by... That is not what I said. I said that the healthcare industry being motivated to push people into a surgery that's not actually beneficial for them only because of profit. That's a conspiracy theory, yes. The fact of the matter is that there's people that they think that their research says something when it really doesn't. That's really what this comes down to, right? That like this whole argument is an empirical argument, right? I'm having an empirical. If we're gonna have the argument about the transgender issue, I'm gonna have it in an empirical way, okay? And the issue is that the American Psychiatric Association and all of these other organizations are making a conclusion based on shoddy research. And that's why they're making the recommendation, okay? Anyways, so what happened yesterday? There were some of the reasons. Well, the big one was that the retail sales number was bad, okay? Bad retail sales number is really bad. Okay, like that's the largest part of the economy. That number really suggests that we are careening towards a recession. And meanwhile, the Federal Reserve is like, oh, we really need to keep things tight, etc., 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 right? I don't know what the origin of that story was, actually. I only saw it on Twitter, and I could not track down what the origin of that was. That was the day before, right? So there was the ECB thing, and rates kind of eased up because of that. Then there was the retail sales was bad. Okay, there was an announcement by the Department of Justice that there was going to be an enforcement of cryptocurrency, and so everybody was afraid that there was going to be something to do with Tether or something like that, and the cryptocurrency market sold off. When they had the actual press conference, it ended up being a nothing burger, somebody from Russia, and nothing really happened. And so cryptos recovered maybe half of it before then slowly and sadly coming back down. Then so that came out about the time that the market turned down. Okay, but the cryptocurrency markets, after the thing came out, the cryptocurrency markets came up. So if it was weighing on the equity markets as well, then wouldn't the equity markets recover after it as well? And that's not what happened. The equity markets just went down all day, right? And then the other one was that Chairman Powell is sick right now, apparently. I do kind of wonder if he will be in good health by, well, probably he should be fine by the time the FOMC meeting happens, right? I really doubt that the market, that kind of headline alone would cause the market to behave the way that it does. So if I had to pick, I would be of the opinion that the retail sales number was really bad, and that it just kind of took the market a little bit of time for them to realize it. Okay. And that when you factor that in, that the S&P 500 really shouldn't be at 4,000, it should be at 3,800 tops, right? Good question, actually. So they didn't say, but from the way that like the story went around and everything, kind of suggested to me that they were making that conclusion based on things that members on the FOMC who don't want to be identified are saying. I find it really hard to believe that, given the current state of the economy, that they would come in and raise interest rates 50 basis points, right? If we had inflation numbers that were still hot, then maybe, but I really, to be honest, I really don't think that the economy right now supports even 1 basis point increase. I think the only reason why you do 1 basis point, not that we're talking about the people that are on the ECB board. That it was kind of implied, not said directly, but it was kind of implied that it was people with familiar with the matter, so people inside of the ECB. It's either I'll put it this way. I think that it was either people inside the ECB, or the story is just completely made up. Right. Anyways, I think the only reason why you do a 25 basis point increase in February is because the market's been expecting that, and you've said it, right? And then I would be, if I was Chairman Powell right now, I would raise interest rates 25 basis points in February, and then I would imply, I would say all things are on the table, even an interest rate decrease possibly, based on what the economic conditions are. So to basically give the out for the market to be able to say, okay, maybe in March they'd do nothing, right? Someone from the ECB said they're getting fired because it was within the blackout. Well, no, because that happened with the Federal Reserve, right? We were in the blackout period. There was a CPI report that was very, very aggressive. And so they literally leaked to the New York Times that they were going to do the 75 basis point increase instead. And so we had this massive repricing in the treasuries 2 days before the meeting. You remember that? It was 100% the Federal Reserve leaked it. ECB can't do that too. How does order flow work for stocks? No. If you get full order flow for stocks, it's just like trading futures, man. Well, it's not just like trading futures, but I mean, you can see things using the same tools for futures. So I have that video about that where I use DX feed to do NASDAQ total view. And there is a wider spread. So I modified one of my tools to give you like a better version of cumulative delta that categorizes the trades better. But it's still, it totally works. You can totally, and in fact, there's some things that kind of suggest that the order flow might be more effective in stocks than it is in treasuries, or than it is in futures. Different laws. Eurogroup is meeting of finance ministers of EU countries. I mean, maybe, but I don't know if the laws really matter. I don't think that the ECB wants to come in everybody thinking that they're going to do a 50 basis point increase when they're actually going to do 25. And if they are in a blackout period, they're still want to, you know, cause the market to moderate more their direction. They really don't like it when they come out with the decision and it takes everybody by surprise. and I guess this bigger thing is just that I've been anticipating that the next increases will be 25 basis points since December. You know, there was this period where we're kind of not sure, but I'm pretty confident now it's 25 basis points, right? As we're at, you know, every once in a while things come in that I'm willing to put my hat on. Pretty confident that the next set of interest rate increases from the central banks are going to be 25 basis point increments instead of 50 basis points. I'm also pretty confident that in the long run, the empirical science is going to come down on the side of that it's not necessarily a good idea for everybody to gender transition that has gender dysphoria. Pretty confident. So there was another comment in here. I don't know. I had another thought on my mind, but I don't know what it was. I veered too far off today. You got me feeling like, oh man, Seth, you gotta be really careful about what you're saying. I didn't say anything wrong. Certainly talked about subjects that some people might find offensive though. Treasury market just been kind of chilling. We're at the higher end of the range, but the activity, I would say the activity really died down. If I had to pick a side, I'd probably be favoring the shorts right now, but yeah, we're going down the right. We really are, man. I mean, the rabbit hole that we gone down is like an important one to talk about. I don't necessarily want to talk about certain controversial issues that are really, really politically charged and aren't really relevant to us. That's not what was my intention. But I know that you guys love to, you know, there's those certain subjects that you just can't say anything and everybody wants to say something about it, right? The issue that I was trying to address in particular is, again, markets are not efficient and there's a lot of inefficient things about our systems. And you can even see it in the science where there are some situations where we can very clearly see that the science and research is being influenced by politics and is resulting in shoddy science. And it's happening in economics too. Maybe I should take it that way. So we have all of this information about the market microstructure, and there are still people in the world of economics that don't want to hear anything about it. They don't believe any of that stuff, right? And we continue to see, you know, studies about things that would be related to, you know, certain political policies that just don't look like very good research. You know, like we see that all the time, right? They've probably never traded. Yeah, I don't completely agree with this idea that like those that can't become economic professors. I don't think that that's necessarily the case. If you're good at your job, what happens is you end up getting hired by a bank, right? So it's not the case. I really vehemently disagree with people that try and make the case that like economics is not a real science. It is absolutely a real science, okay? But there is a lot of political pressure on it, and there's a lot of shoddy science within the profession, just like there is in many professions, right? Like really just like there is in any profession other than like math and physics, right? Anything that's not math and physics kind of has those gray areas where the things that we're trying to figure out are a little bit more nuanced and gray, whereas physics and math is pretty straight. There can only be one correct answer, sort of a thing, you know? So yeah, there's a lot of stuff that people from economics say that's not true, okay? But that doesn't mean that everything that comes out of economics is nonsense. There's still some very good and important economics going on in, sorry, there's still some very important science being done in the field of economics, let's say that. Good research coming out. And the stuff that we talk about on here about market microstructure is, I think, a really key one. That's kind of the frustrating thing, is that the thing that I think would have the information that I believe would have the most positive impact on our society is not getting out. Right? It's like, it's good solid science that tells us something about how we're running our society that maybe we should change, and nobody's heard of it. Is just the great challenge of our generation is, how do we overcome attention biases and convince the public to start paying attention to the things that would actually help make society better? Because as it stands right now, you just have to make the most inflammatory headline that you have and have the media go out and repeat it ad nauseum, and that's what the public cares about. What do you think about Taleb and his views? Well, I think that Taleb talks about this stuff a lot, right? He talks about how many of the social sciences are based on shoddy statistics, right? And he talks about how a lot of what's going on at some of the major learning institutions is kind of anti-scientific, and that the process has basically been co-opted by people seeking to increase their status rather than getting out the best science. It's kind of rough. What if all scientific papers were anonymous? It would be a different world, wouldn't it? How would you raise your profile and move up the industry, though? If you can't do it by putting out good research, because like ultimately that's the whole objective, is to put out good research, right? There's not a simple answer to that one, other than, hey, this system tends to result in certain kinds of inefficiencies. We have to be aware that happens and try and compensate for them somehow, right? What do we owe the market? I think that it was, so I covered it in a short and also earlier in the stream, so I won't go into that again, and I'll just go to the short answer, which is, I think that the retail sales number was really bad, and that it just took the market a little bit of time to realize what it really meant, consequences for it. And they've never seen treasuries and equities so strongly inversely correlated. Yeah, I mean, this is the first time I would not say that this is the first time I've seen them so strongly inversely correlated. In fact, I'm pretty confident I can think of some times back in, say, 2018. Yeah, post-COVID, it certainly is. Certainly is post-COVID. Yeah. it's one of the first times post COVID that we've had like a clear risk off flight to treasuries trade. Yeah, it is. Like yesterday's volume and everything really sticks out to me as a key inflection point in the market. I'm very, very concerned that this turns into a multi-day downtrend. It looks like the S&P 500 is moving up right now, and maybe they recover some of the overnight downside. So, you know, I have some hope, but yeah, I'm really concerned that this turns into a multi-day downtrend, that we push below 3,800 and start making shots at the lows again. It doesn't necessarily have to be the case that we've reached the previous lows. We may, given the timing and everything, we may have already put the lows in, but it sure does look like we're on the road towards a downtrend, and that there's a recession on the horizon. It's, yeah, I think recession's back on the menu. I'm feeling like the data is starting to point very strongly towards a recession. I'm really quite surprised that the Federal Reserve has not moderated their messaging at all, because it really is like we're like straight up in a recession right now, and the Fed is still being hyper aggressive. I don't want to just turn the spigots on and have the market, like, you know, just go gangbusters long and everything, you know, but I'm very concerned that the Federal Reserve is making this worse than it needs to be. You know, it's like there's this point we're going along and I'm like, okay, yeah, this is okay. I understand why some people would prefer it to be this way, but this is still okay. And now all of a sudden we've had this divergence. Now all of a sudden I'm like, no, this is so clear. You have to acknowledge it. You have to acknowledge that retail sales was just absolutely dismal, that the employment numbers are not as good as they appear, and that the US does look like it's going into a recession. And you might say I still favor a 25 basis point increase in February, but I'm concerned about it. You've got to say it. I've been told that gold is no longer an inflation hedge. Well, the thing that you've got to remember about gold is that it's primarily speculation again, right? So when you look at predictors of order flow, right? There's all of these people that are dependent on this commodity for their business, and based on this change, they're going to have to buy more or less of that commodity. That's like a really good predictor of order flow. But they believe that this asset is good in this particular situation, so they buy or sell it because it looks like we're going in that. Not as effective, it's not as much clear cause and effect sort of a thing, because what if people's opinions change, right? And that's kind of been part of the issue with gold, is that it looks like a lot of the people, the regular everyday people that are trying to hedge against inflation, that they were doing it with Bitcoin in 2021, right? You felt the combine? It's combines are crap shoot anyways. So like, do you know anyone that trades for a living? Well, yes, but not really as retail traders, right? I've certainly met professional traders, right, at the bank and stuff, and I've certainly met people that are like full-time trading, but not where like that's their whole income, right? I think so I was having this conversation with a friend on Instagram last night. I need to go back and look at it, because they were going into why you shouldn't own individual stocks. And my take was, if people have an interest in it, you really shouldn't try and dissuade them from being interested in the stock market, because we need people that understand how to invest well, right? It's an important factor of society, and especially when we consider that markets are not efficient, right? So the more smart people that we have in there trying to make the correct decisions, the better. But the stock market is not an effective way to build wealth from nothing. It just isn't. Like, really, ultimately, you're gonna have to get a job or start your own business and bring income in and fund your retirements with index funds. And then when you feel like that you're meeting your goals on that, then you can start putting extra money into individual stocks, right? But this idea that some people have, that I'm a kid just out of high school that has nothing, I'm going to YOLO my money on stocks and become rich, or in futures, I'm going to go and pass the combine and then I'm going to become rich from trading futures, it's not going to happen, guys. It's a delusion. I'm not saying that you shouldn't trade futures or you shouldn't trade stocks or anything like that. Just that it's really just not a very effective way to build wealth from nothing. It just isn't. Okay. If you want to trade for a living, then your goal should be to go and work for a what do we call a large institution. If your goal is that you want to trade for a living and that's where you want to make all your money from, then your goal should be to go and get hired at a large institution, okay? Well, it's not just people that are forced to make a price. So, like, for instance, if you work for Cargill, they're not market making. They're doing real trading in commodities, right? Kind of more position swinging, I guess, but if you owe more as a salary, I just want to pay my bills and have enough to take nice vacation. Yeah, you're probably not going to do that with futures, man. It's just not a very realistic goal. That doesn't mean that people shouldn't trade. It's just you should already have a good source of income, right? Futures trading is something that you do when you've already done well, you're already hitting all your goals for retirement, and you want to be really engaged in the market. That's the person that should trade futures. And if you don't have that money, you can do it on sim. I guess you can do it on combines, or just trade a really small account and just trade micros, and that's perfectly okay too. But please, 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 guys, please do not put off investing more into your 401k and your IRA so that you can play with futures. Okay, that's a huge mistake. Right. And if you get to the point where, you're already making like $200,000 a year or something, then you get to the point where you can start swinging big in futures, and maybe you end up making a few $1 million from it. I think if you already have a really good income, then trading for a living becomes less justifiable. Let's say you make $250K a year. How do you justify switching to day trading? You don't. It's a thing that you do on the site because you want to be involved in the market, right? I mean, if you're making $250,000 a year, you can put tens of thousands into the trading, right? So now, once you're getting into being able to consistently put 10,000, let's just say that you can afford to put $10,000 into futures trading a year while still fully funding all your retirement stuff, right? Okay. Well, with $10,000, now you can actually do real stuff. Like, you could come in and just buy a treasury contract and have been holding it all month and made, 10% on the year just from doing that, right? Now, let's say you make 25K a year and no career. Now, no, but it doesn't have more potential growth. It really doesn't, though, Lucas. Because the amount that you're going to be trading, even if you like really YOLO'd and did exceptional with it, it's not going to make you 250,000. Do you see what I mean? You can make so much money from the stock market and futures and finance, right? But you have to already have the income first. It's not a good wealth builder. It's a good wealth enhancer, right? Is that the way to say it? It's a good wealth enhancer. It's just not, right? And the thing that bothers me the most is when I see people come on and post on the day trading subreddit and they're like, hey, I just graduated from high school and I want to become a day trader. So I've been doing this for like 6 months, but I'm not having success. And I'm like, no, what the hell are you doing? You could be going to school, going into finance and working towards getting hired by JP Morgan when you get out of school so that you can do like real trading and be dealing with millions and millions of dollars every day and doing the thing that we all wish we were doing. And you're wasting it trying to become a retail trader. It's not make sense. It's not. That's why I say it's not a wealth builder. It just isn't. How did I don't know. You know what? I'm really smart. That's really what it comes down to. A lot of luck, right? I'm really good at what I do, which is on the programming side. I really am a really good programmer, and I really love financial markets, and I really understand them well relative to other people in my field, right? And so I'm very valuable to an institution like that. I kind of have this conundrum here because I kind of feel like I would like to get more involved in the industry again. But depending on what kind of a job I get, wouldn't be able to do the live stream and YouTube and all of those things anymore. Would it be worth it to go and take a job at a bank to learn more portfolio management stuff? That's kind of the thing I'm interested in right now. And take 5 years off and say, oh, I'll go and do that. And then I come back in 5 years and we pick the channel back up again or something like that, That's kind of the conundrum, because I feel like I'm starting to get to a place where in order for me to continue progressing, I would need the benefits that come with being part of a large institution. You know what I mean? I don't think you can trade on the sidelines half an hour before going to a day job and complement your salary. You would have to change careers and a career change where you're making 250K a year and switch into retail. Day trading is a really hard choice. Well, not exactly, at Lucas. So what you would have to do, right, is number one, if you make 250K a year, you can trade before you go to work, right? You can basically approach it like hobby, like is what I do. And you can continue to do that forever, okay? But the other thing that you can do if you're making $250,000 a year is, like, a lot of people do live really well off of $100,000 a year. So what you should be doing is keeping your living expenses as low as you can and pocketing away half of it for several years, right? And if you do that correctly, you can have a really huge wad that could provide passive income, and then you could switch over to the place where you could day trade stocks, and even if it didn't work out for you, you would still have the income, right? You can go and do that for sure. But like the key thing here is that the doing this as like a full-time source of income doesn't really make sense until you get into a place where like you already have millions of dollars in assets, right? It doesn't really make sense until you're like in accredited investor territory, right? And what people think is I want to day trade for a living, so what I got to do is come in and, you know, just start small, and I'll start with my $1,000 accounts and I'll double it and, you know, 10x it, and then, well, okay. If you 10x, if you come in and you trade futures and you 10x it and keep it, okay, you're a legend. You're totally a legend. Okay, but guess what? Now you only have $10,000. Now what? Like, come on. You're just not going to do it, right? You have to already have the income coming in, okay? If you have $50,000, okay, and then you 10x that, then you're talking about real money, right? Then it's worth it. So again, it just comes back to futures trading is not an effective wealth builder. It just isn't. And really, for those people out there that are like, they want to get into futures trading because they think that's going to be their ticket into larger amounts of wealth and everything, just stop. Okay, that's the wrong reason to do it. Okay, if you want to get into like big levels of wealth, then what you should do is go and become a Google Cloud engineer and try and get hired by Google and climb up the hierarchy at Google until you're making $500,000 a year there. That's the easiest, most clear path to getting that kind of money. Okay. Oh, I did. Well, I don't know if he was only trading to buy a car, but I did have a friend that made some decent money trading Forex, and which is a slightly different thing, by the way. But doing Forex, and he bought the car with it, and then I don't think he's traded since. He wouldn't tell me what happened, but I think that what happened was he bought the car and then he kept trading after that and like blew that wad and decided to stop trading because he felt like he was being too impulsive or whatever about it, you know. I think that's what a lot of people do, is they say like, I don't have the self-control necessary for it. There was a really big order there chasing the treasuries around as they moved up. Really huge bid. It was about 4,000 contracts that followed the 23.5. Oh no, wait, that one was a little while ago. Oh, here it is. It was 5K. It was 5K, last seen at 22. But it's been a bid this whole time. But the other thing you got to realize is that it's Forex, right? So in futures trading, you're definitely like, you definitely get leverage, but you know, if you come in here and you take the treasury, okay, and you're trading $500 worth of margin, and you get like a really good trade off of one contract, you know, you could, like, maybe the craziest trade you ever made, you could maybe make $2,000 on, right? Okay. In Forex, with the pips and the leverage that you can get in Forex and everything, you can literally have these situations where, you know, you come in and you take a trade where normally it'd only be like $100 or $200 and you make like 20K off of it. Or like options, that can happen to you in options too, right? So I guess that's the other thing, is that if your strategy is YOLO, if you really are like, I just want to gamble it away and try and make or break it on the stock market, right? And you're trading with a very small amount of money to begin with, you know, your growth potential is probably much higher in options. And the Wall Street bets kind of like approach is probably going to be better for you. Futures trading, again, is for the person that wants to come in and just trade small amounts every day and be really consistent with it. And primarily because they enjoy being active in the market. That's what futures trading is for. But a wealth builder where you grow from nothing, probably not the best place for you to do it. Buy a ton of 1 delta VIX calls 6. Yeah, I tell you what, so if this downtrend really goes and we start making new lows, and let's say that we're in April or May and we're like at dismal, it's like we're at 3,000 and everything. I really want to think about buying leaps. I've never looked at that before. I don't know how much they are or like which strikes and stuff are available, but I feel like that if we had that kind of a downtrend, and it's possible that it could happen this year, that would be one of the opportunities where I would really want to try and YOLO in on something on a long-term uptrend, But I'm not sure. I'm worried that though they would maybe be more in the tens of thousands. Like I'd be willing to put a few K on it. Leaps don't really have a huge advantage over 2x margin. No, I don't think that's true, Ayla, because the advantage that you're going to get on leaps is once the market gets past your strike price and you're like past your break even point and everything, right? The more it goes up, the more gamma you get. So you can really multiply your money with those if you're able to make a good call. Like those are the things where I've been told of trades where people made 10 times their money. Like I think it was Bill Ackman, was it, that bought leaps during the 2008 crisis and made billions off of them? An at the money leap is pretty much half a share or a tenth of the price. Okay. So you're saying that it's like 5x leverage? You straight up have 5x leverage. So if I'm, let's see here. So if we were doing spy leaps, let's say, half a share for a tenth of the price. So if we're at 389 right now, you're saying 389 divided by 2. You're saying that the leaps would be like $19 times 100. So 19,000. Let's just say that I bought them today. Let's just say that I bought at the money today. Okay, so we could pay $19 for it. And then to be in the money, 389 plus 20 bucks essentially, right? So I'd be break even at 369. And then every dollar after that is 100. So to all-time highs is 480 minus 369 times 100, right? So you would be putting $20,000 at risk to make $10,000 if we reached new all-time highs. And where might we be 4 years from now? So it sounds like that leaps might not be quite as amazing of a deal. What would it be? Well, I can try pulling up my platform, I guess. Yeah, let's pull up the actual chain. Okay. If I can find it through their regular interface, I know where to go on in their Active Trader Pro, but I'm hesitant to pull that up right now. SPY. So like 40 bucks. Oh, sure. Okay. View options chain. There we go. So when I look at the options chain, the furthest out chain that I see on SPY is like 2025. Those aren't leaps, are they? Turn off weekly, view all expiration dates. There we go. Like, yeah, the last that I see is December 2025. So is December 19th, 2025 fair to look at then? Okay. I'm not, this is not showing me what oh, okay. There's nothing there. Oh, there we go. Okay. I think I can pull this over now. Oh, you were almost right on, bro. At the money calls. Actually, it's more than you. They're putting a little bit of premium on them for you. So, at the money calls are $66 right now. At the money calls are $66. So in order to make, and that is at, what is it? 390. So 390 plus 66. You're not breaking even until 456. And the all-time high is 480. 480 minus 456 is 24. So 24,000. So your risk reward on a new all-time high at least is 1 to 3. That's not necessarily the best, is it? Like, what would it take for us to double our money? So 456 plus another 66, I guess. That's assuming that you got filled on the bid. 522. By the end of 2025, will we be above 5,000? Or whatever the equivalent of that is from SPY. I don't know. What do you guys think? After seeing that sounds like not worth it. Well, I don't think that I want to put $60,000 onto Leaps. So maybe I could go with a different index or a smaller stock or something like that. Well, so I think in this particular instance, Ayla, it's not really so much that you're trying to outsmart the options makers. Oh, okay. So if I'm expecting it to go there, go with the different strike. Let me, can it show me all strikes? Let me. I'm not entirely sure where I expect the S&P 500 to go to, but I would be looking for at least a 2-to-1 risk reward profile sort of a thing, right? So let's just say that we were buying 480. So if we bought at 480, we could do it for $30. So I think on a trade like this, the idea is not necessarily to outsmart them so much as it is trying to take advantage of the impact of orders. So if the market falls, right? If we go into a recession and the S&P 500 goes and breaches new lows, the lows for the S&P 500 are going to be much lower than what the fundamentals will suggest. Okay. So, you know, and then if it turns bullish again, it's going to go much further than the fundamentals should suggest. So really, we're trying to take advantage of that the market will always go too far, right? On a longer time frame. So if we were going for a new all-time high plus $30, well, 480 is maybe not right. Maybe 450, 440. Yeah. Okay. So at around 430, 440, we could maybe get it. That would have all-time high as like your break even. Low gamma has an added advantage of being very susceptible to vanity changes. Yeah, one of the things that we have to consider is that if the scenario that we're considering here, I mean, we're looking at what you would get like right now, right? If the scenario that we're considering actually happens, then some of these would probably be a lot cheaper than they are right now, right? There would be probably the time period where we'd want to buy them. There'd probably be a lot of volatility, and that would probably make them more expensive, but we'd be at much lower prices as well. But you're still kind of getting into, we would have to buy them pretty far out of the money. We'd have to buy them pretty far out of the money for it to really make sense, right? And we would have to be spending tens of thousands, right? And I think that if I wanted to invest, let's say $5,000, it would probably make more sense for me to just go in on individual stocks and just pick some of the more high beta stocks. Yeah, if it goes very in the money, it will move like a futures contract. Right, but if we just go back and we say that we bought it for $70 right now at 390, where did my calculator go? We bought it for 390 right now plus 70. Oops. 390 plus 70 is gonna be 450, right? 460. Okay, so we're break even at like 460, right? Then every dollar it goes up after that, we're making $100 on something that moves about $5 a day. So you'd be making or losing $500 a day. So it would be and then once you start getting gamma on it, then it would be like a futures contract. Yeah. Can you buy them on just SPX? Really? You're right. Whoa, you can buy them for... Oh, no, that's 2023. $2027. Now we're talking. Oh, they're hundreds of dollars. That's not happening. But if it goes anything like 85 to 90 delta in the money, it would be like a 2 ES. The issue that I have, though, yeah, you could buy the spread, maybe. That's not a bad idea at all, actually. But what I'm concerned about here is not necessarily so much the leverage, you know, as it is like, what is my risk reward overall, right? So like, if we just say I want my loss to be equal to if we got to a new all-time high, right? And then if it goes beyond that, then I'm making big money, right? But the issue here is that like, if we have this downturn, how long is it going to take to get to the new all-time high? Because I don't think that it's going to happen in just a year. I think that we're going to have like a really long period of slow growth potentially, because even if the Federal Reserve reduces interest rates, they're only going to reduce them by like maybe 50 basis points, you know? So it could be a rough next 5 years. So from doing all of that, it kind of looks to me like for the trade that I'm making, that trying to leverage it up with options doesn't really make sense, and that really what I need to do is just consistently put money into the market, both through the IRA contributions and through some high beta stocks. Wait for SPX to retest the March 2020 lows to buy 5,500 strike calls. Wait. Okay. You're like way more into this YOLO sort of idea than I thought you would be, actually. You're kind of talking, the way that you're talking makes me think that you like the idea. Wow. Did you hear that? I don't think that sound would go out over the stream, but Jigsaw just gave me a block buy. That is the first block buy I've heard in like 2 years. 3,000 bot at 115.20 half. To get a 5,500 strike call. Yeah, what's the highest strike that they give you? The highest strike that they give you is oh no, that's the lowest strike. I want to see the highest strike. Oh, you can get 5,000. You can get, nobody's traded 5,000. Oh wait, and they're only 5 cents. Oh man, wait. I don't know if that actually makes sense though. The bid is 0 and the ask is 5 cents. Oh wait, did I not scroll down? You're right, I didn't scroll down. Sorry. Okay, so the largest, oh, I can even get 12,000, but it's $6. Darn. I don't know if we're gonna go to 12,000. That seems a little silly. Okay, so here's how I'm gonna do this. If we go to a monthly time frame, okay, and we're gonna draw a trend line, even though trend lines don't really work or anything, but let's just say that we come back to this longer term trend line right here. Let's put it like that, okay? And now we're extrapolating out to, what was it again? 2027. So according to our line in 2027, that's December 2027, right? Then I get what is that? I can't even see it. I need to scroll even further out. $48.92. Doesn't make sense. Yeah, that one doesn't make sense. Put up 600. Put up 600 for that bet that it will turn into 120k. Oh man. That would be insane, right? Like, it's just it looks to me like leaps are really expensive for what you're getting. I'm trying to draw the line here more correctly. Horizontal line. There, we do it like that. Okay, so we're looking for 27. We're looking for December 27, right there. Right there, like that. 50.90. 50.90. So see, so if I thought that it was going to go to 50, let's just say 6,000. Let's just say that it was going to go to 6,000. I have to go to 6,176 to even be a break even. Go shortly. Oh gosh, dude. Yeah, I could make 6,000. I could make $6 million. Nah, I don't think it makes sense. My dreams just gone right there, man. So I think my play is I need to be doing some research on the sectors and so forth that I think are going to do well in the recovery here that are high beta. This is what I think I need to do. If I'm going to try and do a little bit of YOLO here in a downturn. So I should be able to. But I think I could maybe put 5,000 into this. Spreads would maybe make more sense, right? Although I think that this would be a little bit harder to. Okay, wait. So if it was a spread, let's just say we were gonna spread from 390 to 400. You could make $500. Problem is if SPX drops like 20 to 25%, Ivy would be so inflated you probably would pay more for these options than currently. Yeah. That really is the problem, isn't it? It makes way more sense. The options YOLO play makes way more sense shorting the market when it's like going way over crazy than it does trying to buy the dip, right? To buy the dip, maybe just go with the high beta stocks. I don't. There's probably some things we could do to kind of sort that out, but a lot of the strategies that we could take advantage of in that situation, you'd really need a big wad to take advantage of, right? Like I was saying, like we could sell a spread and stuff like that. Sell a put spread, collect $500. Nah, that's dumb. That's dumb. You could buy the put spread, make $500, but then if it goes higher than that, you don't get any advantage. Yeah, I don't think it really makes much sense. Not for me, at least. Not worth it. It was fun to look at, though. It was awfully fun to look at. Sell an at the money spy put. And sell shares. No, stop. drawing a picture. Even though the pen is like really slow here. So if we're short shares, then as it goes down, I make money like this. And then I am selling a put. So if I sell a put, then, and it goes up, I make a little bit of money, right? And if it goes down, I lose. So, did I draw that right? I don't like the profile on this graph that I'm drawing right here. That sounds like a not the best idea. If it goes down, add to your short spy. If it goes up, add to your short put or shift it up. So once we get into like as it moves, like change, that sounds like a little bit too sophisticated for me. That would be so nerve-wracking to manage that. If I was doing that like full time, maybe. Just hope 1987 in portfolio hedging kerfluffle doesn't happen. Nah, you know what? Like it really doesn't have to. If I just buy some stocks, right? Like here's the thing, is that if I just buy some stocks that are really undervalued in there, I'm probably going to make, and they're good stocks, of course. You're probably going to make like 5 to 10 times your money if the S&P goes to the same price. I don't think that the leaps really make sense for me. You know? Yeah. But you're not lapes for this one, do the monthlies. The problem here is just that you're starting to get into something that's sophisticated enough that it's hard for me to sort out what the actual implications of it would be just from drawing it out here in stream. I would have to like really draw it up and put it in the simulator and stuff. I don't think I completely understand it. Like I'm trying to figure out what would be the advantage of doing what you're saying. I don't see what the advantage of that is. What's your favorite recent strategy? Well, so what we do here on the stream is you got to know that something's going to happen. And my favorite opportunities have been ones where the Federal Reserve like really clearly is saying something and the market like kind of pretends that it's not hearing. We've had a lot of those last year. So I think those have been my favorite trades. Just make a hest on. See, you're saying it's, yeah, I'd have to look at it off stream. The Powell head, yeah, that's exactly what it is. Like the best was at the beginning of the year in 2022. It's like the Federal Reserve's like, yeah, we're going to start raising rates and we're probably going to continue raising rates until inflation disappears. And everybody was like, no, you're not. Nobody believed it. I made all these TikToks like telling people what was going to happen and being like, guys, you really probably don't want to be in all of these tech stocks. Like that's not the place to be right now. And everybody kept saying they can't raise interest rate, guys. They wouldn't be able to manage the debt if they did that, and all of this. Nobody believed it, and it was like the most obvious trade ever. And we didn't take advantage of it as much as we should, but we still did pretty good in 22 from those. The market is not informationally efficient. There is public information available to you today that you could use to predict future stock prices that the market's not factoring in. Always like that. Yeah, and some of it is so it can be, yeah. It can be. I mean, my big thing here and on the trading side of things is my recommendation to people is to divest yourself of all forms of technical analysis and find information that can directly lead to people buying or selling that the market's not factoring in yet. See, like the thing that you're talking about, Akshay, is like, okay, so I'd have to go and learn what this model is. I'd have to go and program a bunch of stuff and do all of this work. If I'm going to do all this work, I think that it would need to be on like a portfolio level strategy that I'm running for a long period of time or something. And I don't know if it makes sense for me to try and do something like that on options, you know. I would prefer, if I'm gonna put that much work in, it's gonna need to be on like, you know, like a risk parity strategy. You know, one of the things I need to do is like, okay, let's just program a risk parity strategy. What are some of the things that can help us there? You know, like that's where I kind of want to go. I feel like, and I could be very, very wrong, but I feel like I've really learned the key things with day trading, related to day trading. So to continue growing in my understanding of markets, I think that we need to focus on portfolio level strategies, like fund strategies, right? Kind of and try and find a strategy that we could start a fund with, right? And I don't know if your little option setup there is the one. Right. What we're looking for right now, though, is if the S&P 500 drops below 3,400, what's the best long trade that we can put in action for $2,000 to $5,000? Right? That's the goal. That's the goal. So leaps, probably not the way. So for that, you know, we can just buy individual stocks. There's nothing going to stop us from doing that, especially if we find like small ones, right? High beta small names. Just buy ES. But then you risk losing money on it continuing to go down. So how much is it for 100? You buy one ES. A point is like what, $50? So like your potential loss on that in a mark, oh man. Wait, am I right about that? If you catch a day where the S&P 500 moves 100 points, that's $50,000 on a single ES contract, or $5,000 on a micro. See, look, you're already to the point where, yeah, but you see what I'm saying? You're already getting to a point where the daily loss would be more than the amount of money that we're looking to invest, right? Because we're looking 5,000 max. So futures would not be appropriate. Just put 3,400 times 50 in an account and just go for the longest maturity you can and go to sleep. Yeah, I'm totally down for that. Like, listen, if I had like $100,000 that I wanted to do something with, totally, just buy an ES contract and roll it over every 3 months, man. XSP was. Is that like an ultra short ETF or something? Oh, it's mini SPX options index. Ooh. No, it's actually, it's not leveraged. It's tiny. It's not super tiny. But you might be able to get some options that work better with that. Yeah, it's 1/10 the SPX. Oh, actually, he's got the link for us even. S&P 500 index options. Okay, wait. Okay, let's go back to Fidelity. Probably going to be the same numbers as before, right? Hold on. I don't think I'm logged in. I'm only down 0.1% today. I mean, that's good compared to what it was. Oh, I don't think I get it. They giving me quote. They're showing me like the information and stuff, but I'm not getting any quotes or option chains. So I'd have to go open a special account somewhere. Notional size $39,000. Oh, there's nanos. There's even nanos that the notional size is $39. Let's do it. Oh, they're European style options though. I don't know if that matters. I usually hold things to expiration anyways. That one still messes with me. I think if I had held it all the way through. So we bought some options on oil. Oh, they've always been indexed. Okay, it kind of makes sense because they're cash settled, huh? So I bought options on oil. I think it was USO. I think was the index that I did it on, and I made like $1,000 or something like that, and then they expired and it was good. And what I should have done was either rolled it forward or turned around and bought the index with the $1,000 that I had. And if I had done that, I would have made a real bundle on the jump in oil that happened after that, because it was all before Russia invaded. Now, if I had held it all the way through to today, we'd be about where I bought it at. we'd be about where I bought it at. So if I had held those all the way, I would be at 0. And I think that's maybe what I would have done. So I don't know. It's just interesting to think about. Like, it was a good trade and you're like, oh, it could have been so much better. But in the end, it was a good trade and really saved my portfolio last year. My stock portfolio, that is. Because of that one trade, you know, I was still down like 5 or 6%, but it was better than most of the market. And it was certainly better than it would have been without that, because I do have some pretty high beta stocks. I guess we might as well come in here and look at what they're doing today. Man, my Goldman just got hammered this week, which sucks. So the one that I'm really interested in, did I tell you about this one, Akshay? So there's this, so full disclosure, I own some shares of this stock, okay, that we're going to talk about. And it is a penny stock and it's a small stock, okay? It's called Rare Element Resources, and what they're doing is they've got like a rare element mine over in Wyoming, I believe it is. And they're also building a facility to process the rare earth elements. And so they're trying to develop a process that would be more environmentally safe and allowed in the United States, essentially. Okay. So that's kind of like the premise of the stock. And it took off during the pandemic. Like at one point, I think it was like close to $5. I don't think it's Canadian, but it is a penny stock. Right now it's going for 36 cents. Okay. That's the quote. That's the last price that I'm getting right now is 36 cents. It was up as high as like $4 or $5 at one point. Now I'm still positive on the position. So like it went up, I was like, oh, maybe I should take profits on it. But I was like, no, I believe in the larger idea. I didn't just invest in this because it was like YOLO, small stock. No, I invested in it because I see rare earth elements as being a really important thing that we in the United States need to develop and wean ourselves off of China in that respect. And so even if the stock goes to 0, I'm okay with investing in it because I believe in it and I think it's important. So that's why I invested in it. So I'm like, well, I'm going to stay in it because like the larger play, the bigger thing hasn't happened yet, which is that they open the mine and we start getting rare earth elements out of it, right? Okay. But it's looking pretty sad. Okay. Like all of the interest came out of it. And this has kind of happened across the board in the rare elements space, let's say. Okay. Well, I still try and keep up on it. And I had found out that 4 of the executive officers all bought a ton of options. It was like $200,000 worth of options or something like that. So I'm sitting here like, is that? I don't think it's a Canadian company, but now I need to look that up. I'm pretty sure they're based in Wyoming. Yeah, US needs a couple more years of 7+ inflation to make them right. Okay, so anyways, the point of it was this. Okay, they bought options. And I'm not sure how usual or unusual of a thing that was. Because it seemed like it was big amounts. Now, there's like naysayers out there, like on the Yahoo Finance conversation for it, for instance, that are like, oh, they're just trying to prop up the stock because there's like no, like there really is like no volume or interest in it anymore. But they all have options that expire in like April or May, I think. So I'm sitting here like, is this like a normal, usual thing that executives do, sort of a thing? Or are they anticipating something really good happening to the stock in the next 3 months? And I'm not even sure if we have enough information to really make a play on it, but it was something really, really interesting that I saw that I feel like I don't have enough experience to really correctly interpret, you know? I can find the here, I'll go and find it for you. So I saved the link somewhere. So like, here's the SEC form. So they bought on the 4th of January, they bought 300,000 option shares. That expire. Oh wait, these say expiration date 2033. I seem to recall it being closer than that. Transaction code, date exercisable, and expiration date 01/04/2033. How do you get them that long, that far away? How would I find where it's a, well, here's their website. Investor information. OTCQB, that is Quebec, isn't it? Mm-hmm. Well, their corporate headquarters is supposedly in Littleton, Colorado, but maybe you're right that it's like it's an American company. Yep, REMF. Maybe it's that it's like an American company and everything, but that they registered everything in Canada. Like that they did everything through Canada because, you know, that's like the easiest. Well, where do you see that? Transfer agent is in Vancouver. Yeah, it's but your point, your larger point here is correct. We're talking about a super sketchy stock. Yes, we're talking about a super sketchy stock. It's a super tiny penny stock that on a project that is like a total YOLO, right? Like the people that are funding this thing, it's like a total YOLO. And yeah, I'd say there's even a possibility that like they're not doing anything, not just that they don't have success, but that they're like not actually doing anything. Possible, sure. It's one of those sorts of things. It's like the sort of stuff that the Wolf of Wall Street was talking about, right? How much of a company is there actually? Like they have like 20 employees or something like that. It's like it's a super tiny stock. But that's not the question. The question is, does this mean anything? Does this mean anything? They're buying options at 38 cents a share. Has a really long expiration date, but they all bought them. There was like four of the top directors, executives, or whatever bought them. So does that mean anything? I'm not sure, because it's the amount of money that they're putting into that is not actually that much. I thought that the expiration was closer. Doesn't say, oh, the options will vest and exercise as follows: 150,000 on July 4th and 150,000 on January 4th, 2024. So I thought that it meant that there might be something going on like in the next few months, but I guess it doesn't really say that. You might be able to read it as confidence in the stock, but that's kind of interesting. One of the things that also happened with this one, it was that as things were going out, they definitely, yeah, could just be bonus options or part of a salary package. Okay. Well, I won't think about it much more beyond that. Yeah, when it was coming down, they did like a rights offering, which kind of pissed me off, but like, that's probably what I would have done in the same situation. Was like, well, okay, like this worked out really well just because of the market, you know, we'll take a payday here, but you know, keep things going. As long as they keep going and they're really trying to make the project happen, then I'm okay with it. And I'm okay with putting a little bit of money into it. Nothing crazy. I think I have like $400 worth of it. But you know, if it happens and their process works and they start mining stuff out of this, just so you know, this is going to be a stock that's going to be worth like hundreds of dollars, right? So just saying, it's a YOLO. Well, it's time for me to get going, guys. It kind of sucks that we didn't take any trades, but like, look, the treasuries didn't do anything interesting today, did they? Interesting that we're starting to get some big trades come through here now, though. So, overall, though, for this week, we have not moved nearly as much as I thought we might, have we? So, yeah, it's interesting. Well, and as I'm leaving you guys here, they're heading down towards testing 3,900. So things could get spicy here in a bit. I really hope that we don't have another big down day. I don't want us to have like a real downturn here, but it's kind of making me a little bit nervous. I guess there's no loss on my part. I really should try and put more money in here if we come down again. All right, guys. Yeah, I think we can be happy about today's stream overall. We had some fun though, didn't we? Looked into some interesting and exotic things. So I'll see you guys tomorrow, and in the meantime, stay excellent.